The dollar is not dying, but the system is changing. And as we go through those changes, the dollar dynamics can cause havoc on different market segments. And it can act in ways that are often confusing to those who are trying to understand why it's doing what it's doing, where it's heading, and what it means for the overall health of the system. This is what we discussed this week with my friend Mark Moss. We had this conversation, I think 7 to 10 days ago. We're finally publishing it now. And I think it's pretty interesting because Mark's been a long time, very successful business guy. He's obviously recently been operating more in the crypto world and has some pretty good insights on that side of things. And so we often come at these things from a little bit different way, but that's what always makes the conversations interesting. So stay tuned, and that's what we're going to have next. Also, not sure if I'm going to be able to do this podcast next week. I'm going to be traveling internationally, but I will do my best to get one out to you. But if for whatever reason I miss you, we'll be back again in 2 weeks, and I look forward to talking to you then. Stay tuned.
There's a lot of talk right now about the so-called death of the dollar. I mean, every cycle, the same headlines, they come back. But the real question isn't whether the dollar's dying. The real question is whether people are using the wrong model to understand what's actually happening. Because in every crisis, global capital is going to keep moving. But understanding where the capital moves is the difference in success or failure when it comes to your investments. So today, we're going to break down the mechanic behind that. We're going to talk with Brent Johnson. He's the founder of Santiago Capital. He's the creator of the milkshake theory. So let's go ahead and just jump right in with Brent. All right, Brent, everywhere you look right now, people are calling it into the dollar. You've said before that when everyone starts using that language, it usually means they're misunderstanding the system. So where does that misunderstanding start?
Well, I think part of it, the misunderstanding is and for good reason, we've been taught if something goes up, that's good. And if something goes down, that's bad, right? It just kind of makes sense from just a rational standpoint. But the issue that I've tried to explain with the dollar is that as the DXY falls, that means that the dollar is becoming more entrenched in the world, because the way that happens is that means more dollar liquidity is being put into the system. But the way dollar liquidity gets put into the system is by the creation of more US dollar credit. So when you see the DXY falling, that's actually the world becoming more dollarized. It's when the dollar DXY goes up versus foreign currencies, and it starts causing all kinds of problems. And people are forced to use something other than the dollar because they just can't get it. And things start to break, and they're forced to find alternatives, that de-dollarization happens. And this is part of the reason why I've always argued that we are going to transition from one system to another. And at some point, the dollar will lose its status in the world. But I think that process will see the dollar go higher before it eventually falls and fails, rather than going lower. In other words, I don't think we're going to see the dollar go into the 80s, 70s, 60s, and then it just kind of withers away. I think what's more likely is we'll see a bunch of chaos, a bunch of volatility, during which the dollar will go higher, and then what comes next perhaps will be a new system.
So what you're saying is that when the dollar goes higher, then that creates problems for other countries, and so then they're forced to then try to find something other than the dollar. When it goes down, that means the dollar's actually expanding. There's getting more dollars compared to other currencies. But I might say, before we started recording, we had a short conversation about something else. So what I would say is maybe that was the case, and so if the dollar's going up, then people are forced to find another currency because the dollar's going up. But there could be other reasons that people might be forced to find another currency other than the dollar going up. For example, if it continues to be weaponized against them. And then thereby, either one, they were kicked out, so they're forced to find something, whether the dollar goes up or down. Or number two, they don't want to be kicked out or have it weaponized against them, so they're forced to find something else, whether it goes up or down.
That's exactly right. And you could argue that when the United States weaponizes the dollar, and there's various forms and formats via which they can do this, you could argue that they are the ones creating the de-dollarization or the situation which would cause de-dollarization when they do that. Now, in the shorter term, what I would say is they apply enough pressure to put people kind of on edge and make them acquiesce to certain things. And then when they acquiesce, then they release that pressure. They provide the dollars afterwards, right? So the U.S. doesn't want to lose the dollar as the global reserve currency and as the underlying kind of base layer of the whole system. But they might lose it at some point anyway. But again, I think if and when that ever happens, it will be a violent occurrence, which sees the dollar go higher initially, rather than kind of a slow and steady drip, to the downside.
But wouldn't you say that it's already been a slow and steady drip to the downside? So number one, I think if we look historically, when the dollar took over from the pound sterling, that was a 30 to 40-year process. And the pound sterling is still, I think, the third most used currency today. So that was a gradual process, and it's still there today. It's not dead. I mean, technically not dead. And then you might argue that China and Russia have been de-dollarizing since 2013 openly. It looks like the dollars being used in settlement have gone down from about 60% to, 50%, ish. So maybe it is sort of like this gradual process.
Well, I think what you're describing is the system just continuing to operate as it is expected to. I don't think the dollar's anywhere near to be dying right now.
Right.
So is the system expanding? Are other avenues being searched for and tried? Of course. And I think that will continue. But to actually go to a wholesale change, I think, is a complete other animal. Now, listen, maybe I'll be proven wrong. Maybe the dollar will just slide off into irrelevance as other options rise. I don't think that that's possible. I'm always open to the possibility of being proven wrong, but so far nobody's been able to show me how that would happen, and I haven't seen any real evidence of it, at least on a permanent basis in the markets. But, I think what the other thing I would say is, I think the other problem that many people kind of have with this whole discussion is the whole U.S. dollar DXY doesn't really mean anything because that's just a relative position against other currencies. It doesn't change the fact that it's lost an incredible amount of purchasing power over the last several decades. And I would say that's absolutely true. My thesis has never been that the dollar was going to maintain purchasing power. My thesis has always been that the dollar was the king of the fiats and it wasn't going away anytime soon. And I don't think fiat currency was designed to hold purchasing power. So for people to say that as the dollar has lost purchasing power, it's failing, well, maybe failing in an absolute sense, but that's what it was designed to do.
Right.
The other thing I would say is, since the DXY is at like 97 right now, which is high 90s, which is up probably 10% from when I first started talking about this in 2018. And this is despite all the stimulus, despite all the bailouts, despite all the money printing. And if you think about it, all of the major actions that have been taken against the dollar over the last several decades has always been to weaken it. The Plaza Accord was to artificially weaken the dollar. QE 1, 2, and 3 were done to weaken the dollar. Yield curve control is done to weaken the dollar. So if something is so horrible and it's going to die this awful death on its own, why does the U.S. Fed have to keep coming in and weakening it? So I think, and then finally, I would say that all other fiat currencies suffer from the same issues that the U.S. dollar does.
Yeah.
So it doesn't mean that Bitcoin won't do well or gold or anything else, but as far as fiat currencies go, I think the dollar's pretty entrenched.
Does it mean that they have to weaken the dollar, or does it mean that they need liquidity and the dollar weakening is the outcome or the what happens when they get the liquidity they need, right? I mean,
well, I think it's both. You can argue is which came first, the chicken or the egg, but liquidity is provided by weakening the dollar.
Right. But in the Plaza Accords, the trade deficits were too far out of whack, and so they needed to make the dollar weaker so they could make trade settle better. But in 2008 with QE, the banks needed money. And so the dollar getting weaker was a byproduct of them giving the banks the liquidity, right? So the demand reason is different.
Yeah. Sure. Under those two scenarios, the main reason was different. But I would also say that the reason manufacturing was low and the trade deficit was bad in the 1980s was because the dollar was so strong.
Right.
And the way that you kind of reverse that flow is you weaken the dollar.
Right.
And you could argue that's what Trump is trying to do again now, right? He would like a weaker dollar because he wants to get the trade balance back in, somewhat a reasonable order.
Yeah, I want to ask about that. When we were in Vancouver speaking together a couple weeks ago, you gave a presentation that I thought was fantastic, and you talked about some of what Trump's initiatives are with re-industrialization and national security, things like that. I want to get to that, but if we stay on this, you brought up a good point, which is maybe for most people, why does it even matter? Like, why does it even matter? And to the point
Yeah.
that you made, I mean, most people that are listening to this show already know that you're not supposed to save your wealth in dollars. Uh,
Right.
the Fed tells us their goal is to inflate it away at 2% a year. I mean, we know that.
Yeah.
So then, why does it matter? I mean, for me, I think number one, it's like directional. Well, if they're going to keep devaluing the dollars, then I keep buying assets that will go up with that. Number one. I think maybe, and I think that's like the simple answer. I think maybe the bigger answer is what happens to dollar-based economies, or maybe Americans specifically, if the demand for not just dollars in trade, in settlement, but demand for U.S. treasuries were to dwindle. I think that's maybe the bigger concern.
Well, and I think there's a misunderstanding there as well. Let me kind of take these one at a time. The first thing I would say is if you don't have to, if the relative level of fiat currencies don't matter to you, then I would say then you're lucky, because anybody who runs a business, anybody who trades, anybody who operates on the global stage, there's nothing more important than relative values of fiat currencies. If you look at every financial crisis, or really even any global regional crisis over the last 25 or 30 years, it has always coincided with the dollar rising versus foreign competitors. Now, whether the dollar reacts or whether the dollar is the cause, I think that's open for speculation. But the point is that this is how, this is how crises start, is because the dollar is so. I'm going to explain this. It's somewhat complicated, but I'm going to try to explain it in a simple manner. Because money is loaned into existence, both in the United States and in every other country in the world, that money that's lent into existence has an interest rate attached to it. So whatever that money is then used to do, it has to be put into some kind of a productive use that exceeds the cost of the borrower.
Mm-hmm.
That's called a carry. So it's a carry trade. You have to invest it or do something with it that allows you to carry above the cost of capital. Now, the reason that's important is because on the global stage, the United States only has to face one carry trade. They have to carry higher than the cost of capital in US dollars. Everybody else has a carry trade in two currencies, because they operate in dollars on the global stage and they operate in their local currency in their local market. But that local market also has a carry trade, and that money is also loaned into existence. And the issue is that fiat currencies trade relative to each other, which means that for every other country in the world other than the United States, one of the carry trades, either the global carry trade with the dollar or the local carry trade with their local currency, is going against them. And there's a band in which if the dollar trades, everything is kind of fine. I don't know exactly what it is, but let's just say it's 88 to 102 on the DXY. If you go over 102, things really start to get bad from a liquidity standpoint on the global carry trade with regard to dollars, and that causes problems. If the dollar goes below 88 and is now at 85, 82, or 80, that means the alternative currency has risen a lot. And because that alternative currency is typically associated with a manufacturing economy that exports, those exports are now more expensive, and it makes it harder for them to export and exceed the cost of carry in their local currency. Now, like I said, if we're between 102 and 88, it kind of bounces back and forth a little bit. It's, the world kind of goes on and it's no big deal. But if you get outside of that band on either side, it starts to cause problems. And when carry trades break down is when crisis happens. And that is why just about every time you've seen some kind of a crisis or economic downturn over the last 25 years, it's coincided with dollar strength, because not only does a strong dollar cause a crisis, but it's also where people and institutions and governments have flocked to during those time periods. Now, the last point, and I know I'm kind of rambling on, but I'm trying to answer all the questions, is the difference between a treasury and a U.S. dollar. Now, a lot of times people will equate them as the same, and in some senses they are, but they also trade opposite. In other words, as bond prices fall, interest rates rise. And as interest rates rise, that, all else considered equal, will make a currency stronger because it attracts capital into that currency because you get paid more to hold it. So my thesis on the dollar getting stronger has always been that interest rates would rise. So this started back in 2018-19 when interest rates were at zero. And I said the 40-year bond bull market was coming to an end. Interest rates would rise. That would cause bond prices to fall. That would cause all kinds of problems because the whole world owns treasuries, and that mean their balance sheets falling. And the higher yield as a result of bond prices falling and the chaos caused by bond prices falling would lead capital to flow into the U.S. dollar because it would be more attractive on a relative basis, not the bonds, but the currency. And so I do agree that perhaps the world is not as excited to own treasury bonds as they used to be, and for good reason. But I don't necessarily think that hurts the U.S. dollar itself.
All right, stop what you're doing right now and book your travel to come join me in Las Vegas for the Bitcoin conference. It's the biggest event of the year, the one I look forward to the most every single year. Literally, my entire year calendar is set around it. It's the biggest event, the most culturally relevant event happening in the world. The top politicians, the top bankers, the top investors, the top entertainers, everybody's going to be there. So come check it out, April 27th through the 29th. Use my code MarkMoss to save 10%. And if you use my code to save 10%, send me a message on social media or email, and I'll invite you to a private party I'm having at the event, and I'll see you there.
You laid out the scenario that sort of really highlights the problem that you have when you're trading internationally. I lived this for the first time building this house down in Mexico. And in Mexico, they're quoting me prices in pesos, but then they're importing everything. And some stuff's coming from Europe, some stuff's from Mexico, some stuff's from the U.S. And they couldn't give me a quote because they didn't know what the price would be in a week or 2 weeks or 3 weeks. So it's like, hey, this is the price today. When you're ready to buy, come back and we'll tell you. But then even depending on how long it would take them to get the goods, the price could change. And I just realized
That's right.
Academically, I understand this. Living through it was something different. And it just made me realize, wow, this is never going to work. Like, how can global trade work like this? Like, this is insane. And And I realized why when you go to the gas stations in Mexico, they have the peso price and then they have like the conversion price, and it's always way below what the actual exchange rate is. And the reason why it's way below the actual exchange rate is because they're going to have to take those dollars and go exchange them for pesos, and that may not happen for a week, and they don't know what the rate will be. So they have to basically gamble on that, and so they're going to take a big discount. And you know, I see that, but again, like living through it was something different, and you realize like the system is very fragile, and like how could that continue to work? Even in a
and if you're a little mom and pop shop, and you're not a currency hedger, and you don't have a brokerage account or a futures account where you can hedge the currency, and even if you did have that, you don't have the skill to do it, and even if you did have the skill to do it, you're too busy running your shop than to be trading, right? And so it's just not as easy as many people think it is.
Yeah. So, obviously being a Bitcoin guy, we've talked about, sort of how does the world in the future move forward without some sort of a neutral reserve asset, whatever that may be. At Davos, that just recently happened, Jameson Greer was there talking about, he outlined a strategy of high tariffs and a neutral reserve asset. And it seems like
I didn't hear it. Was he talking about gold or Bitcoin, or what was he referring to?
I mean, referring to gold, not Bitcoin at this point, right? But really, the gold, Bitcoin, whatever. I think it's like, do we need a neutral reserve asset? And if so, then what is that? But I'm just curious, like, how would that square with this milkshake theory's reliance on these persistent U.S. deficits that we need to run?
Well, so there's a couple things. So you got to remember that part of the milkshake theory has always been that gold would rise. And the very first time I ever talked about this publicly, I said we'd get into a situation where the dollar would rise versus fiat currencies and gold would rise as well. And I think, while we haven't had the crisis that I thought we would potentially have, and the dollar hasn't gone back to its all-time high, it did go to 113 or 14 in 2022, and we got pretty close. And over that time period, gold has done extremely well. The other thing I would say, though, is that I think we have to be careful saying, do we want a neutral reserve asset or do we have to have one? Now, I think as individuals, and maybe many countries out there would like to have a neutral reserve asset that can't be confiscated and can't be controlled. But just because that's what we would like to have doesn't mean we have to have it. In other words, I think, for much of history, there wasn't necessarily a neutral reserve asset. I mean, gold has always been there. Sometimes gold has been money and sometimes it hasn't. But I think for the world to operate efficiently in a peaceful manner, then we need a neutral reserve asset. And again, whether that's gold or Bitcoin or something else, that I would prefer that the market determines that.
Right.
And that's typically, for it to be neutral, the market would have to determine it.
Yep.
If some government said this is the neutral reserve asset, then it's no longer neutral, right? But I think there's a lot of people. Maybe I have this wrong, but this is just my perception in the conversations that I've had. Is I think a lot of people recognize that we're in this fourth turning environment where there's a lot of imbalances in the world. The trends are just not good. Institutions that have, existed for decades are starting to fall. People have lost faith in governments and rule of law and all of this, right? I don't think it takes a real genius to make that observation. But I think a lot of people then think, okay, well, then what comes after the fourth turning is the first turning, the spring, the renewal, the exuberance, because everything is new. And I think because we have lived in the last 100 years, which is a relatively unique period of all of history, I think we associate that renewal with peace and freedom and individual rights. And I don't necessarily think that has to be that way. I would like that. That's my preference. But there's nothing to say that the next institutions that rise or the next country that rises to become the hegemon or whatever it is has to be as, peaceful and loving and all that other kind of stuff as what we've experienced the last 100 years. This is why I say things might not work the way that we want them to work, and they may not function the way we would prefer them to function, but that doesn't mean they won't function.
Yeah.
And I would bring that up with regard to the tariffs and the manufacturing and that stuff with the U.S. There's a lot of people who said, listen, these tariffs are just not going to work. And my answer has always been, well, it might not work the way you prefer.
Yeah.
But this is how history worked for most of history. So to say it won't work is wrong. Now, doesn't mean there won't be pain involved. It doesn't mean there won't be volatility. Doesn't mean there won't be higher prices. But it will work because it has worked.
Yeah. I love that. I love that that line of thinking there, Brent, just because I try to make sure I'm never thinking in absolutes because there's always nuance. And you brought up a good point and maybe even a blind spot in my own thinking where I'm just like, man, how could the world continue to move forward and trade globally unless they have some sort of neutral reserve asset? And to the point that you brought up, it can happen, not very efficiently, not good. It may greatly diminish that. We may not have as many fruits and vegetables or cheap electronics, on our shelves, but doesn't mean it won't still happen. And I think that's a good way to sort of look at that.
If you just use let's just use the last 2 years as an example. Like things are more expensive, over the last 2 or 3 years, things were more expensive than they were 5 or 6 years ago, right? But we still get up in the morning, the sun still rises, the earth still spins, people still go to work.
Yeah.
Again, it's not working as efficiently and cheaply and nicely as it was before, but it is still operating.
Yeah.
And so I guess I think, maybe we can say a prayer and we'll go back to those nice sunny days, but it doesn't mean we have to.
And when you look at countries all around the world, you see that, unfortunately, there's a long way to fall in disorganization and inefficiencies. And,
Sure.
Just look at any number of African or, Middle Eastern countries and to see how inefficient and they run because of all these persistent problems that we're sort of outlining, but yet they're still operating. Not as good as the people there wish they were, but there they are, right? So I think that's a good point. Now, for us trying to navigate this, and again, like we're trying to sort of understand how these things move so we can understand how we should sort of move off of that, which is difficult because it's moving so fast. When we think about sort of where we're at, you mentioned tariffs. Donald Trump has been And not just Trump, actually, Biden before him even introduced the CHIPS Act. So there's been this sort of push of the U.S. Really, I think COVID woke the world up to like, hey, these just-in-time supply chains are very fragile. And especially when it comes to things for national security, maybe medications and military stuff like that, like we need to probably have better systems, more, have that in our economies. So Biden started the CHIPS Act. Trump has continued that re-industrialization, if you will, national strategic initiatives to reindustrialize the base, things like that. And I want to get into that because I know you're investing in around some of that. But like, if we think about it from a high level, though, it seems like the U.S. is that could create a very strong GDP growth. If that happens, then that would push bond yields higher. But it seems like the U.S. would need the dollar to be much weaker in order to accommodate that growth. So how do you see like the need for this reindustrialization, which I think you agree that's happening and should happen and will happen? But then how does that affect the bond yields and the strength of the dollar?
Hey, look, you've worked hard to build your Bitcoin stack, but if it's still sitting on an exchange, it's not really yours. You see, the exchange holds the keys to your Bitcoin. Now, if they freeze withdrawals, if they get hacked, they go under, your Bitcoin, it could disappear overnight. Even if you've moved it into a single cold wallet, you're still exposed. Now, that would be one device, one point of failure. If anything bad were to happen, you could lose your Bitcoin. Now, that's why I use Unchained. Their collaborative custody vault gives me the best of both worlds. I hold my keys, but my security doesn't depend on just one of them. Now, this is where security and sovereignty actually meet. You see, Unchained's collaborative custody Bitcoin vaults use a 2 of 3 multi-sig model, which means that you hold 2 keys and Unchained holds 1. That means that you own your Bitcoin, but if you ever need help, like their team is there to assist you without ever having control over your funds. And here's what I really like. Unchained isn't some offshore exchange or anonymous company. They're based in Austin, Texas. When you call, you're not stuck with bots or scripts. You talk to a real Bitcoiner who genuinely cares about helping you get it right. Now, they've been at it since 2016 and now secure over 12 billion in Bitcoin for people just like you and I. Now, that kind of trust doesn't happen overnight. So if you're serious about long-term security and ownership, head over to unchained.com/MarkMoss and use code MOSS10 to get 10% off of your first vault. Because if you don't hold your keys, you don't hold your future.
So first thing I'll say is I don't know for sure, right? I think we got to be careful again when we're giving these answers of how certain we are. But I think my standard answer to this question has not really changed in the last year, and this is the answer. There will undoubtedly be challenges. I don't think it will be easy.
Yeah.
But I also think it will work better than most seem to think it will.
Now, just before you give the rest of your answer,
Yep.
You run a fund, Santiago Capital.
Yep.
And so we all, as individuals, investors, and you on your fund on behalf of your individual investors, you don't know how it's going to work out, but you have to place your bets based off of your base case. So before I give you too much wiggle room, at some point we do have to place our bets, right? So
Yeah. No, so I'll tell you, the majority of our investments are placed in the United States because on a relative basis, we still think that's where the most opportunity lies. Now, that's not to say that there's not other opportunities other places. It's not to say that the rest of the world is a dumpster fire that deserves no attention. I just think on a risk-adjusted basis and based on all the plays that are happening both politically and geopolitically, I think that the U.S. still has the biggest growth potential on a risk-adjusted basis. And part of it is what is going on with what the Trump administration is doing. I do think that Trump wants a weaker dollar, and I do think that he wants lower rates. But
he said that like a dozen times, but yeah.
he says it all the time. But you have to remember that the U.S. rates are still close to 4%. It's at the high. That's at the high end of all its competitors. Europe's like 2.5 or 3, and Japan is still at 2, and China's at 1.5 or 2, and I think Brazil is 4 or 5. But the point is the U.S. could cut rates 100 basis points, which is basically 4 cuts, and still be on a relative basis relatively high compared to its peers. And so just because they cut rate, and the other thing I'd say is markets move in on anticipation. The market has moved a lot since Trump has been elected. and since he's been into office, and now it is down significantly from where it was a year and a half ago, or even just 6 months ago. And so I would argue that a lot of the move associated with much of those cuts is already priced in. And even if we cut more, I don't necessarily think that means the DXY goes into the 80s. Now, could it? It absolutely could. But again, I think that would speak well for growth. Because if the dollar's falling, that means there's plenty of liquidity out there. It means businesses are getting funded and people are getting paid. And so I that does not worry me. And I do think, companies around the world will still import into the United States despite the tariffs. I think companies around the world will still build plants in the United States in order to avoid the tariffs. I just saw a thing today with this guy that tracks the trucking industry. And his point was that he is seeing a pickup in transport and trucking business in the old iron belt and in the Midwest. But it's not associated with an increase in imports. So in a lot of that trucking increase is not going from the coasts into Middle America. It's Middle America shipping amongst itself. And he was attributing that to some of the policies that Trump is putting in place. The other thing I would say is, if you have a situation where you have high relative rates, they don't need to be high absolute, but high relative rates combined with fiscal stimulus, fiscal spending, that can actually generate an environment which is good for growth and is good for asset prices. The best example I can give of this is exactly what happened in Germany in the early 1990s. And Soros got very famous for this. He said that when they were reunifying, when East Germany and West Germany were reunifying, they were going to have to spend a lot of money to kind of make that work. And that fiscal spending led to a lot of fears about higher inflation in Germany. So the Bundesbank had to raise rates. And a lot of people said that's going to crush Germany. And Soros very famously said, no, the higher rates will pull capital into the Deutschmark because you get paid more. And the fiscal spending that Germany is going to do will push asset prices higher and help fund businesses. And he said the flow of funds that flow into Germany will deprive the other European countries from that liquidity. And so that is what led him and Besant and Druckenmiller to put short bets on a number of currencies that were not in Germany, and very famously ended up breaking the Bank of England. So the point being is that just because things may not be perfect, and just because in a long-term basis they may be bad, it doesn't mean in the short run, 6 months to 2 years to 3 years, you can't see some positive effects. And as someone who's a free market guy and kind of libertarian leaning politically, I don't like that governments are getting more involved in markets. I would much prefer that they didn't. But that's not the world that I live in, and that's not the world I operate in. And if a government is going to spend $1 trillion in a specific industry, more likely than not, the valuations of that industry is going to rise, right? Yep. And so that's how I think about things.
You're referring to the imperial circle, I believe he called it, right, George?
That's exactly right.
Imperial circle.
That's exactly right.
Yeah, money flows globally, and when interest rates go up, it attracts more capital.
Exactly. I mean, I would encourage people, even if you don't think that that's what's happening here, to look up the imperial circle. It's funny, I just, in my show this weekend, we just talked about this. But it's important that people should just understand it from an operational perspective. Doesn't mean you have to bet on it. Doesn't mean you have to believe it's going to happen. But understanding it as a concept has been very helpful for me.
So back to the U.S., we need to reindustrialize. We need critical minerals like immediately, like tomorrow. Rare earth elements, nickel, silver, etc. We need to not only mine it, we need to refine it. We need to according to Trump, we need to rebuild the military capacity. All of these things.
Yep.
So there's a lot of money, government stimulus, to your point, being spent into those areas right now. That could push the GDP up because that's all domestic. So then that pushes GDP up. Lutnick said to Chamath on a recent All In podcast, I think 3-4 weeks ago, he thinks that we could see 5% GDP, maybe even 6% GDP, which is like really big, right? That's like where China was when they had massive growth, right? Trump, I think, came out last night. I saw he said maybe 15% GDP. That's insane. So if we have all this government stimulus going into these areas, these domestic areas, that increases GDP. The economy's humming. What the Fed always seems to be worried about is then inflation. But what I saw, and I'd love your take on this, Warsh. So I was looking into him, and it looks like he was saying that he thinks that the Fed is stuck in like 1970s metrics and that they need to sort of retool the way they look at these things. And I think what I saw specifically was them counting employment wages going up as inflationary. And so Lutnick in that interview was saying, look, like in certain areas where job demand goes up, wages go up, but that's not inflation. And so it seems like Warsh, or however, maybe he's in the good old club with Besant and Lutnick and Trump, is like, wait a minute, like I don't want high inflation, but maybe we should rethink how we categorize inflation, which would be accommodative for this stimulus, the GDP growth, without calling it inflationary. Is that how you're reading it, or are you seeing it differently?
Yeah, and I think, the other thing I would say is, I think, to me, it's pretty clear that Trump wants rates lower. Anybody who thinks that he doesn't is just living in kind of fairyland.
I said
right?
1%. I think he wants him at 1% before he leaves office.
But I think he does. But I think that Besant is pretty smart, and I think that Lutnick is pretty smart. Now, listen, you might think that these guys are misguided. You might not think they're good people. You might think that their politics are all wrong. That's fine, but they're not stupid people, right?
No.
If you look at the people that Trump has surrounded himself with, these guys are either amongst the best or worked for the very best that did this. And so this is why I say I don't know for sure that what they're going to do is going to work, but I'm certainly not going to bet everything that they're wrong. So that's first. But to your point, if you can stimulate industry and you can then create jobs, and those jobs pay more than they did before, even if there is inflation, it doesn't eat away at the middle class the way that it used to. And the other thing that I would say is, if you don't like the tariffs and if you don't like the policies of Trump, I get it. That's fine. But how else are you planning to solve the inequality problem that led to Trump getting elected in the first place, right? What is your plan to bring jobs back to Main Street? What is your plan to bring manufacturing back to the United States? What is your plan to figure out a path to growth so that we can hopefully pay off some of this debt that's been accumulated? The idea that we're going to go back to free markets and laissez-faire and, exporting manufacturing and jobs to the other side of the world are just no longer politically acceptable. And it's because the reason they're no longer politically acceptable is it led to the hollowing out of the middle class. So I don't love tariffs. I don't like, authoritarian governments. I don't like, the Fed mixing and the Treasury getting involved in industries. But if you are trying to reshore industry and you are trying to rebuild the economic dream that many Americans grew up with, you got to do something.
Yeah.
And so I'm not shocked at what they're trying to do.
Yeah. I want to get into how investors should think through this and how you and your fund are positioning for this, because I think it's very valuable, and I want to learn more about it. But I want to just stick on the tariffs piece for a second.
Sure.
When I looked at how Trump picked his cabinet, one of the things that he did is he had everybody do these interviews, and they all had to be graded on how they could speak or appear to the media and things like that. And so you listen to like Lutnick or even Besant. I mean, I'm sure you appreciate, man, they are the best trolls. Oh yeah. Man, I mean, even Besant, like you wouldn't see that coming. But when you listen to Lutnick talk, he's able to take these complex subjects and make them very easy to understand. And then back to that Chamath interview, by the way, let's just link to that in the show notes down below so people can go listen to it. I think it's worth a listen. But he talked about tariffs specifically, which I think is an important point, and we'll see what your take is because I know you're a student of history. He talks about, I had Yaron Brook on recently, and I know you know Yaron. He's out there in Puerto Rico with you, and he is like, he runs the Ayn Rand Institute, is as libertarian free markets as they come. He thinks tariffs are the worst idea in the world. But I'm like, but what about when other nations are weaponizing their economies against you and they're subsidizing their goods? And he's like, well, that's on them, and eventually they're going to lose, which is correct theoretically. But maybe you don't last that long. And so Lutnick gave a different story, which I thought was great. And he's like, so look, like, let's just say you have, 2 islands, and one island produces all the goods, and they're subsidizing that. The other island is buying it. So they're sending the money to buy the goods. Well, that nation, or the island that gets the goods, starts reinvesting into the nation that gave them the money. And in a short period of time, they end up owning all the factories, and they own all the land. And now the company that had all the wealth is owned by the nation that was the factory. And that's a very simplistic way to think about it. But when you start digging in, and he lays out a bunch of the data, how Japan and how China, he talked about how the different regions in China all have to compete against each other for, like, EVs, for example. And because they have so much government stimulus, these regions will compete against each other, and they'll overbuild, and then they can't sell them. And now they're like, well, what are we going to do with them? Well, let's just dump them into another country at a massive loss. Yeah. Right. And then they get the money, then they buy the country, right? And so it's like, when you start to understand that, to the point that you're making, in a Yaron Brook ideological world, like, we should just have open borders and we should just freely trade. But in the world that we are in, you can see how dangerous that could become very quickly. I don't know if you have a different view of that.
Absolutely. And
governments will never stop printing money, so inflation, it's not going away. Now, if your money's not earning at least 10% a year, you're losing purchasing power. And that's why I talk about Bitcoin. It's the number one way to beat inflation and secure your future. And the question I get asked almost every day is, where do you buy your Bitcoin? Now, for years, I've personally used River.com, and I only take on sponsors that I use and I trust. And I trust them because River's Bitcoin only, they have 100% reserve, and they keep your Bitcoin safe in cold storage with no middlemen. And you can actually talk to a real person, a US-based support dedicated manager. Now, try getting that peace of mind from Coinbase. Of course you can't. Now, the perks, if you set up auto buys, you can pay 0 fees. Plus, instead of your bank paying you, 0.4% on cash, River pays you 3.75% on cash paid in Bitcoin. So if you're ready to build your Bitcoin position with confidence, go to river.com/markmoss and get up to $100 in Bitcoin when you sign up. Because freedom starts when you own your money, and your money starts with Bitcoin.
Again, you're talking to a guy who doesn't even think countries should exist, right? But they do, and they always are going to. And so we're not going to have this world that Brent Johnson wants. And so once you have a country, one of the main, services that a government is supposed to provide is protection, right? And then it all rolls downhill from
like
there.
The only thing they're supposed to provide, yes.
Right. And if they can't provide that, are they really a country, or are they a viable government, or are they a legitimate government? And so this is a very simplistic answer, but I think in many ways the hollowing out of the American empire led to the inability to defend the country, or you could make that argument, at least whether it actually got to, that's where it was headed. And I think that is in the process of being reversed. Now, there's a lot of people who say, we got so far along that path, it's too late. There's nothing we can do. In order to reverse this train, it's going to take 15, 20, 30 years, and it needs to be done in 5. And so my answer to that would be, well, maybe you're right, but maybe you're not. Maybe it won't take 15 years. Maybe it will take 5, but, I think it's very easy to bet against the idea of the United States coming back. But do you really, really, really want to make that bet? And remember, if you're betting against the American economy coming back, you're not just betting against Trump and Lutnick and Besant. You're betting against the truck drivers. You're betting against the farmers. You're betting against the school teachers. And you're betting against the guys sitting in their garages in Silicon Valley who invented the world that we now live in. And I think when you make that bet, it's a little bit harder.
Mm-hmm.
You know what I mean? Would you walk into a bar in Oklahoma and tell them that they can't compete?
No.
I'll go with you. I'll go with you, and you can say that. I'll bring a camera, and you let me know how that works out.
Yeah.
And so I listen. I want to be clear. Like, I think we got some really, really challenging years ahead of us, but I don't think that it's impossible, and I don't think that I think those that automatically think that it's a lose-lose, I think they just need to open their minds a little bit to the possibility that maybe some of this just might work.
Yeah. I think after I lived in Puerto Rico, where you're at now, I have the house in Mexico. I spent a lot of time there, built a house, so dealt with that. Spent a lot of time in other parts of the world as well. And you just realize, like, wow, like America is just so different. Like, we were bred on competition. Like, we were just bred on it. And like, I don't understand in Puerto Rico, I'm like, I could just go crush every business here if I just answered the phone. I could just answer the phone. Like in Mexico, if I just showed up at 9 a.m. and like it's just like, but they don't do that. But you have to in America because there's 15 guys behind you that will, right?
Well, that's it. Okay, so I think you're touching on something that I think is very underappreciated, and I don't know if I'm going to be able to explain this in a proper manner or give it the importance that I think it needs. Is that I think every culture, every country, there's like a certain ethos that country or that culture has. And I think at the end of the day, for better or for worse, Americans are cowboys. Like we are willing to go into the wild frontier, take all kinds of risks. And when we win, we get all the spoils. And when we lose, we get up and we try again.
Yeah.
And I don't know that other countries have that to the same extent that the United States does. And America loves a challenge, and they love winning, right?
Yeah.
And it sounds very simplistic, but again, is that who you want to fight? On a relative basis, is that who you want to go up against? I think there's something to be said for that. And I think that's what led to the United States being great. Unfortunately, I think the United States has kind of fallen along the way. I don't know that everything will work going forward, but I don't want to bet against them.
So how do you want to bet along with them then?
Yeah. So I am of the opinion, I've said this for a long time, that I think that where we are headed will end very, very badly. Because I am a free market guy, and to your point, all of the policies that that China had that led to their great growth are now starting to stifle them, right? Because they built out overcapacity and they borrowed too much money, and the demand is not there, et cetera, et cetera. And I think that's where all this involvement from the U.S. government now getting into markets could eventually lead. But I think that could be 10, 15, 20 years down the road. I think what's going to happen in the short term is everything that we've talked about, I think it's going to work better than expected. Doesn't mean there won't be short-term volatility along the way, but I think, again, so long story short, we are betting on, we have most of our investments focused in the United States. The equities that we own are almost all predominantly large cap U.S. equities. The short-term fixed income that we own is U.S. Treasury bills. We own gold because that's the neutral reserve, right? That's what we were talking about earlier. But one of the areas that we're looking to place capital now is in the economic renaissance of America, and specifically of national defense as well as natural resources. Because like it or not, the world is getting divorced. We are going from having one supply chain to two supply chains. And as a result, the supply chains need to get built in the Western Hemisphere. Now, whether that's specifically in the United States, whether it's in Canada, Mexico, El Salvador, or Chile, I don't know. But I think that the Western Hemisphere is going to become more integrated. So we're looking to start to add into our Latin and South America exposure. We only have a very tiny bit right now. But the biggest growth area I see is in this area of national defense and natural resources. And one of the things I spoke about in Vancouver was that I don't think that this isn't a secret, and it's not, it's not classified or anything, but I think the most important government office in the world right now sits in the Pentagon, and it's called the Office of Strategic Capital.
Yep.
And they're run by a guy named Steve Feinberg, who he was the founder and chairman of Cerberus, which, if you want to talk about rough and tumble and hardcore, aggressive market people, Cerberus is about as hardcore as it gets. And this is this is not a guy that likes to lose money. This is not a guy that hands out money for free. But his job is essentially to coordinate all the resources of the United States government to revitalize industries in both natural resource and technology that are crucial to the United States being self-sufficient and independent from adversarial countries. And those, that they got funding from the Big Beautiful Bill, and that group is then going to partner with private investors and private investment managers to go fund the companies and these industries and market sectors that need to be developed so that they can accomplish that goal. And, because these industries have traditionally been outsourced to other parts of the world, they're not that big. There's not that many companies in there. But there's an ocean of money that's going to get funded, that's going to fund those areas. And so, when I look at these relatively small industries and I look at the amount of money that's going to get spent to develop them, that tells me valuations are going to rise. And so we are going to be investing in that space. And I think it's the right thing to do, and I think it's a good thing to do, and I think it's going to be a profitable thing to do. Now, there will inevitably be things that go wrong. It will not work perfectly. But when I look around and I see where else do I want to place capital, that makes a lot of sense to me.
So you have this reindustrialization 2.0, sort of like what maybe we saw wartime economy after World War II. There's a massive push, a massive urgency to get some of this, like reindustrialize the base, rebuild the military, these critical minerals, things like that. There's a lot of money that's now been earmarked. And so what you're basically saying is there's a plan, there's urgency, there's a national imperative, and there's a ton of money. And it's all going into just a few certain sectors, and that revolves around these critical minerals, these commodities that are going to be needed, and then companies that are in these certain sectors.
That's exactly
and so
right.
you have a small amount of commodities and companies in that area, and you have a huge national imperative and money supply coming into it. So then supply and demand. That's the big thesis.
Yeah, I mean, as investors, that's what you look for, right? Now, in a perfect world, would I prefer the money wasn't coming from the government? Of course, but that's I play the board in front of me, not the game that I invented in my head.
Yeah, I mean, as investors, that's what we have to do. So
yeah,
I agree with you on that, from a bunch of standpoints, but again, like, I don't like it either. It is the hand that we're dealt. And when I look at, Lutnick breaking down sort of how these other nations do things, in order to stay somewhat relevant, in order to stay competitive, we have to do that. And yeah, maybe it's good or bad. Maybe it's both. It's good and bad at the same time.
Well, to that point, one thing I would say for the people that don't like tariffs and think that we have a horrible tariff policy, I would say we always have a tariff policy. It's just a matter of whether or not we're involved in the negotiations.
Right.
Because every other country in the world does use them against us. And so the idea that we should not use them, but everybody else should, and that's the way a free market works, is just silly.
Yeah.
Right. Again, I think it's really hard to do. I was not good at it initially. I've gotten better at it. I think we've touched on this 2 or 3 times now in this interview, is that you have to be able to separate yourself from what you would prefer to see happen to what's actually going to happen. If you look at the market like a game and you understand the rules of the game, and the goal is to win the game, well, then figure out how to win the game based on the rules of the game, right?
Yeah.
You don't have to go invent your own game.
Yeah.
If this is the game that we're playing.
Yeah. I think that's right. I also do think that, if I'm given a bunch of similar choices, then I should invest in the ones that lead me to the world that I want. So I do think that, but not from a pure ideological standpoint. I don't know if you know who Jeff Park is. He used to be with Bitwise. Now he's working with Pomp over at ProCap. Extremely brilliant. And he wrote this article, I think it was maybe like last September, and I think it was the fall or the end of the intelligent investor and the rise of the ideological investor. And he was saying, like, the Benjamin Graham, Warren Buffett value investing, that's gone. And today people invest ideologically. And he was given, some examples like Sydney Sweeney makes that commercial, and then American Eagle jeans, like, their stock goes through the roof. Or Bud Light does the Dylan Mulvaney thing and their stock goes through the floor. And it's like, these are not value driven. They're just straight ideologically driven. And that's not the best way to preserve your capital or grow your capital.
No.
No. Now, so I love that. I know I've joked with you sort of like being Captain America. And I think it's great. I mean, we should have pride in it, but I think it's also a good, strong thesis as well. But what do you think, back to, you said maybe the government shouldn't be as involved in it, but here we are. So what do you think about the Fed and their independence in light of this sort of a situation?
Yeah.
Like, they want to be independent and run things that don't accommodate these national security concerns? Or how do you think about the independence of the Fed?
So it's funny because I've had pretty strong feelings on this and been expressing them for the last couple of years. And I am of the opinion that the Fed has never been independent. They've had autonomy. They've allowed, the government has allowed them to operate in certain ways within a certain band, but they've always had the ability to take it away. The Congress created the Fed with a stroke of a pen, and they can remove the Fed with a stroke of a pen. And at the end of the day, a central bank of any country, the purpose of the central bank is to perpetuate the status quo. They are the lender of last resort. Anytime an economy falls or crashes, or a currency falls and crashes, the government finds itself out of work as well. So keeping a calamity from happening, and therefore the government losing relevance and its ability to govern, is the point of a central bank to begin with. So the idea that the government put in place something that is not going to help them do that, in my opinion, has always been silly. Now, as far as I think because of what has happened over the last several years, especially with all the bailouts and then with the high inflation that followed, the Fed has done themselves no favors in the court of public opinion.
Yep.
And Besant and Trump are now trying to, quote unquote, rein them in, so to speak. And I think that they will be successful in doing that. I've said for a long time, I thought that the Fed and the Treasury would ultimately get merged, whether that's an official thing or whether it's just behind closed doors. I think that's where it's headed. And I think that is especially the case with Warsh. I would be surprised if Warsh didn't play ball with what Besant and Trump are trying to do in Lutnick. My guess is that Trump will get pissed off at him quicker than Besant will.
Yeah.
But I think perhaps the combination of Besant and Warsh and Lutnick, maybe the three of them against Trump, can kind of keep it. I don't know if anybody can keep Trump in bounds, but perhaps those three have a better shot than everybody else. But I do think that I think the central banks, and this is definitely the Fed, but I think it's also the ECB, the PBOC, the Bank of Japan, all of them. I mean, I think they are going to become more explicitly tools of the state going forward.
And do you think that's a good thing? Do you think they should be?
No, I think it's a horror.
Why is it a horrible thing? To me, it seems like,
okay, so
why would you want to have this unaccountable, unelected group of bankers that answer to nobody and they can just do whatever they want, as opposed to working to help the will of the people that voted?
Yeah, so I suppose we need to define what a good thing and a bad thing, what that means. I mean that based on my own personal beliefs of free markets, right?
Well, we should have no Fed. I would say we could have no Fed.
Right. But if we get back to this is the world we have and we're trying to win the game, then you want the Fed on your side.
Yeah.
And you don't want them off doing something that isn't part of the team. The example I have used many times is, I'm a movie buff. I love movies. I love movie quotes. And there's a famous scene from the movie The Untouchables where Robert De Niro plays Al Capone, and he hosts this big dinner with all of his lieutenants there, and he walks around with a baseball bat, and he's making this baseball analogy, and he's basically saying, we are all part of a team. Everybody does their job, and if anybody gets out of line, then they're no longer on the team. And he hits one of the guys over the head with a baseball bat. I kind of feel like that's the environment we're in now. And it not just the U.S., the whole world. We're in this kind of rougher and tougher world right now than we have been. And, power seems to, power plays seem to rule out over any kind of diplomacy. And I think having the central bank on your side is part of that.
Yeah.
And I think that's the kind of world we're going to have as countries compete for resources in the years ahead.
I think that's what Mark Carney said at Davos a few weeks ago. He said, if you're not at the table, you're on the plate, or something to that effect. But I would say,
right.
Yeah, I'm with Ron Paul, like, in the Fed. Like, we should just be done with that. I like a sound money standard.
It's funny because and our friend George has the hat in the Fed, and I don't. When all of those people who said prayed for the end of the Fed, I don't think they thought that Donald Trump would take over in his place.
Yeah, well, but that's an ideological view. The reality is, we have a Fed. So given where we're at, I think when I think about the Fed, number one, like, depends on which side of the Creatures of Jekyll Island book you fall on. They're either a cabal of bankers that have no control, or maybe there's, to your point, maybe Congress could rein them in, maybe, theoretically. However, we have them. But the problem, it seems like, and back to sort of Warsh's comments, and Besant's made the same thing, they're too, what do you say, they're too analytical, or they're too, what do you call them? Anyway, they sort of operate in like this rear view mirror, like managing the chairs on the deck of the sinking Titanic, versus like thinking forward. So it's like, we need to like win this AI race. Like, we need to just do that. And like, we need to get our military rebuilt. Like, we need to just do that. And that's like a 5 or 10 year, 15-year plan. And so we can't just be managing the economy based off the CPI reading this quarter. Like, we have to think, like, where are we going in 5, 10, 15 years? And that's where I think like that independence, number one, like, why should we just have these bankers doing whatever they want? That doesn't seem like a good idea. But number two, we need to be working together to sort of like build that vision into reality. So
I will say this, even though I don't necessarily like what's going on in the world, it's really, really, really fascinating.
It's interesting.
And for somebody who, for someone who likes the things that I like, right? Like geopolitics, international relations, markets, the madness of crowds, it's really, really fascinating.
Yeah. Yeah. It is interesting. It is frustrating, though, to see, you said I think you said the madness of the crowds. It is frustrating to see the masses and how easily they're able to be swayed and blown with the wind. It is a little frustrating. We see it a lot more today than I think ever before, but it's fascinating.
It is.
Well, with that, I think we can wrap it up, Brent. That was really good. I love the thesis.
It's always fun talking to you.
Just tell us about the fund, or anything else you want to point out to that people can follow or get in touch with you if they want.
Yeah, sure. So, overall, Santiago Capital is a wealth management business. We customize accounts to individuals, and then we also have a fund where it's kind of a commingled strategy, and it's through that fund that we're going to be making some pretty significant investments in the arena that we talked about earlier today. It's only available to accredited investors, but if any accredited investors have listened to this and find it interesting, they can reach out to me. Brent at santiagocapital.com is my email. We do a show every week on YouTube called Milkshakes, Markets, and Madness. And then we have research. If you go to research.santiagocapital.com, we put out kind of long-form research on a pretty regular basis. And we have one coming out. It's a follow-up to our stablecoin report we sent out in the fall. We've got a follow-up to that coming out later this week. So we cover a lot of different stuff, but like I said, it's a fascinating time to be involved in all this.
Gives us a lot to talk about. We'll link to all that down in the show notes down below so you guys can find it. And with that, we'll sign it off. Thanks so much, Brent.
Thanks, Mark.